Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. Oil companies hiked their pump prices just a week after implementing a major rollback.
As more and more employees return to the workplace, office space demand is seen to further grow in the coming months.
The PSE adds two new indices. One is for mid-sized companies, while another is for firms that give consistent dividends.
And Fitch Solutions warns that the Bangko Sentral may face risks if it remains to be accommodative, while other central banks around the world have already raised interest rates. We begin our broadcast with another round of oil price hikes taking effect today.
And this marks the 12th fuel price hike this 2022. Oil companies have increased their gasoline prices by 3 pesos and 40 centavos per liter, while diesel prices are up by 8 pesos and 65 centavos per liter. For kerosene, the upward adjustment is at 9 pesos and 4 price rollback on the back of a slight easing in global crude prices last week. Transport group Pasang Mazda is now pushing for a provisional fare increase in PUVs to help drivers cope with the incessant oil price hikes.
Kami po ay nakikipag-ugnayan kay Chairman Delgra na naway ibalik po muna sana yung tinatawag nating provisional increase, Sir Robbie. That was 2018. Actually po, ang pamasahe po ng jeep is 10 pesos na. No? So siguro sa mga pagkakataong ito, at magtulong-tulong muna, yung pong tinatawag nating provisional increase naming piso para maging 10 pesos po ang aming first 4 kilometers na minimum fare. At naway sana naman ito'y tugunan ng ahensya at na sa ganun pang mamaraan po, ang ating mga tsuper ay kahit papaano meron po kaming panlaban dito sa kinakaharap naming presyo ng produktong petrolyo na nangyayari ngayon.
Meanwhile, research firm Fitch Solutions says the Bangko Sentral may have to face risks if it remains accommodative, while other major central banks are already tightening monetary policy. Now, citing weaker global risk sentiment, Fitch Solutions rather explains that a narrowing of real interest differentials could lead to hot money outflows and downside volatility for the peso. Both the U.S. Fed and the Bank of England have started raising interest rates to tame high inflation. The research firm believes the buildup in inflation pressures could prompt the BSP to tighten monetary policy over the coming months. Fitch Solutions is expecting the central bank to increase interest rates by 75 basis points by the end of the year.
In other news, office space demand is expected to pick up in the next 6 months as many firms issue return to office orders. The IT BPM sector is seen mostly fueling this surge in demand, according to the latest report by Lichu Property Consultants. This as many companies stand to lose their tax incentives should they refuse orders to send back 70% of their workforce back to the office by April 1. The current work-from-home setup is considered a threat for property developers as companies would likely start ditching their leases if remote working stays for much longer. But with many firms adapting hybrid mode of work, even as restrictions ease, how exactly might this affect the office space market? Let's get insights from David Lichu, CEO of Lichu Property Consultants. Good morning, Sir David. Thank you for joining us today.
Good morning, Danny. Thank you.
Okay. Sir David, based on your report here, BPOs seem to take up at least 55% of live requirements in the near term. But, currently there's a push and pull here in the sector with workers and firms calling for an extension of the work-from-home setup, particularly the hybrid mode. So how much of an impact could this potentially have on the office space market?
So I think there's a, as you said, there's a to and fro between the government and the BPO sector for going back to the office, and I think somewhere in the middle is going to be a compromise between that, and it should be somewhere between 30% and 50% of the total footprint. And if you look at the last 2 years, the BPO industry continued to hire people in the Philippines, and that's a validation that every time there's a global crisis, the Philippines benefits from it by having Western companies move jobs to the Philippines. And we didn't feel that as much in the real estate sector because 2/3 of the people they hired worked from home and only 1/3 started going to the office. And I do think that trend is going to continue, and there has to be a compromise that should be done between government and the BPO sector to find that sweet spot as to what ratio actually works for both parties.
Can we clarify, David? Because the issue here is just the PEZA issue, right? They might lose the tax benefits, but in fact, they might still go to other places, right? Wherein they can do this hybrid situation. We have had call center of the Philippines. We've had ITBPM representatives come in the show, and they were saying that the productivity might offset the tax benefits that PEZA is requiring. Do you see the issue just being a move from PEZA spaces towards other areas, for instance, the provinces? Or is this a real exodus from office space in general?
So first of all, I think because 98% of leases got renewed in the last 2 years, those leases will not terminate for another 3 to 5 years from today.
Okay.
So it's not like we're going to see this massive exodus of tenants. Now, if they do work from home and if they increase the proportion into work from home, they will do that by not having new hires go to office. So the people who they've hired in the last 2 years will probably keep continuing to stay in work from home, or they will do a rotation where people will work in the office 2-3 days a week and then at home 2-3 days a week. So so the only thing that's going to matter is that you're going to see, prior to pandemic, you always had this correlation between headcount, revenue, headcount, and real estate. Now that revenue and headcount is still aligned with each other, but the real estate take-up is lagging behind because of work from home. And that's why for the last 2 years, the take-up could have been much bigger because we were hiring a lot of people in the industry, but we were just not feeling it in the real estate side. And I think that's gonna persist. And companies will say, okay, I don't need to go to PEZA, and I will take these what you call satellite offices just to accommodate work from home people who need to go to the office. So instead of having offices for 1,000 people, they will just have offices for, let's say, 300 people. And if you look at this slide that you have right now, despite all the talk about work from home and about companies not needing space, well, this quarter, the last this first 3 months of 2022, you've seen the third largest live requirements, which means companies going out to inspections, wanting to do deals. This is the third highest, and we haven't seen these numbers since COVID started, which is a testament to where I think the recovery is headed. And 50%, 60% of this requirement is coming from the BPO sector, despite all the concerns we've had about work from home. So I think the office is here to stay, and this is based on all the boardroom talk that we've been in. And as you can see back in the US, many of the big tech firms and the banks have said we don't need the office anymore back in most of 2020. And then in the second half of 2021, they realized that the setup doesn't work and that they want everybody to go 100% back in office as soon as possible. And I think what you're going to see in the West, where people are going back to the office, you're going to see here also.
But David, also looking at that slide earlier that we presented here, live requirements, at least for the first quarter of the year, still far from pre-pandemic levels based from that chart as well. When do you expect that to actually go back to such levels?
We need two things. One is a comfort that COVID is manageable. I mean, Omicron, just remember, okay, that 50% of that quarter got shut down by Omicron, okay? All because we went to Poblacion and to Boracay and had a great party, right? And and I think now that it's manageable, we all got hit by Omicron, or most of us got hit by Omicron, and yet it was manageable. It wasn't fatal, and you just brush it off. And if COVID doesn't come back with a vengeance, then I think that's going to pave the way for a much faster recovery, because you see it in those slides, right? Those charts had a big hockey stick, and hopefully it keeps going up. Second is that we need the POGO sector to come back. And I think while the Chinese POGO segment is still very large and they're starting to trickle in, I think the one to look out for is the Indian POGO sector. And I think that they were investigating the Philippines back in 2019 until COVID hit, and I think they're going to come back in 2022.
Okay, that was actually my next question, David. Can you clarify here how much of a blow of the POGO sector has been cushioned? You were highlighting that it should have been absorbed by the IT-BPM sector, which now is also facing its own host of challenges. And to what extent are you expecting that indeed to be coming back anytime soon?
Yeah, so if you look at the POGO sector, they are responsible for almost 55% of all contractions in the country in terms of office space. It's going to take a while to get that back. And 60% of all the space they gave up is PEZA space. That should have cleared the way for the BPO sector at a time when PEZA space is so scarce. And now, how much PEZA space is out there in the market? About 1 million square meters of vacant space, and more to come as the quarters as pass, because more projects are going to be completed. I think it will take a couple of years to be able to wipe out all that space, but it entirely depends on how fast the BPO sector takes space. And I think you've seen the lowest take-up in 2020 and 2021, and the BPO sector is looking to pick up another 400,000 square meters this year if all these numbers that we're seeing in the first quarter happen through in the second and third quarter. So they're going to pick up a lot of this office space that's currently sitting vacant. And all it takes is for one good year for the POGO sector to come back, and a big chunk of the space will get taken out again, as we've seen in 2016 all the way to 2019, and how much space they took. They pretty much produced a deficit in office space. So there's a good chance that the POGO sector might come back. Probably not as strong as what we saw in the first wave between 2016 to 19, but even a modest increase in the POGO sector will produce a big jump in demand for office space.
And then David, also circling back here to the BPO sector, like what you mentioned, it all depends also on how fast the industry is going to accelerate. But we did talk to various stakeholders, like what Danny mentioned earlier, and some of the primary concerns here is that a number of the BPO workers have already returned to the provinces as work from home setup is allowed in their firms here. Question now is, how fast is the sector growing as well, especially when it comes to office spaces in the provinces?
So we've seen the largest take-up of office space in the provinces in 2021. In proportion, about 30% of all take-up happened in the provinces, and Iloilo has consistently been the largest recipient of office space. So Iloilo, and kudos to Mayor Treñas and his team, Iloilo has been the only market in the Philippines where the demand for office space is greater than the supply. There is an office space deficit in Iloilo, and rental rates continue to climb in Iloilo because of that. So it's been an amazing ride for Iloilo for the last 4 years. And there will be other Iloilos. I'm very excited for Clark, because Clark is the untapped labor market, I would say, because there's a lot more growth that can happen in Clark as Clark becomes integrated with the rest of Northern Luzon with all the roads and rails that's being completed there, plus the catalysts to be provided by the opening of the Clark Airport. I think Clark will transform transport in the Philippines and foreign arrivals in the Philippines. And it will bring the Philippines closer to North Asia, where the largest tourism markets come from.
Okay. David, last question before we let you go. Quick update, please, on the residential sector. We few weeks into alert level 1, have the prices of properties significantly gone back up, the tenancy rates improved, or the lack of tenancy improved, and which trends are you looking at? Is there still this trend you're seeing towards outside the areas of the CBDs, or are people returning now, going back to the office space, issue closer to their workplace?
Yeah, so there's a very clear divide between the middle market and below, one segment, and the other segment being the upper middle and above. So the middle market and below, they've all been decimated. So these are the people who's lost their jobs, had pay cuts, missed their bonuses, did very badly in the stock market or in Bitcoin, and they have to give up their home, or they have to give up their car, or they've missed their payments, or they're about to default on their loans. And this is where a lot of the price erosion has happened. But if you go to the upper middle and above, while there are a few distressed deals there, the general market condition has continued to appreciate in prices in that segment for capital values. And that's despite COVID, despite a 10% contraction in the economy in 2020, and despite as much as a 50% erosion in rental rates. Prices in this market continue to climb. If you look at Forbes and DASMA, where the average home in Forbes is 700 million to a billion pesos just for the land, prices continue to climb at 5%, at a rate of 5% through COVID. Ayala Alabang is up 60%, Puerto is up 150 to 300%. And I would say in most markets in the upper middle and above, where the compounded average growth rate was 10% a year, COVID slowed it down to maybe 5%, 6% a year. And I say to people, keep buying during COVID, because when COVID is gone, or when we adapt to COVID, the property prices will go back to CAGRs of 10% a year. And you will say later on, I should have bought during COVID, because really, as they say, you shouldn't waste a good crisis.
All right, thank you very much again for those insights and your time this morning. David Lichu, CEO of Lichu Property Consultants.
Thank you very much, guys. See you soon.
Now, coming right up after the break, Filipino startup Grocery raises more than $77 million, or about 4 billion pesos, in its latest fundraising activity.
More of that and other stories when Business World Live returns. Stay with us. Sino hindi nag-chat dyan? Okay lang yan. Aktibidades.
Yes, nasabi ko na po. Nasabi ko na.
Alin?
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, Dan, with oil prices calming down, foreigners have also paused on the exodus. How are markets doing this Tuesday?
Jess, both sides here, like you mentioned, finally oil paring down. This is the WTI. When you look at Brent crude, it's still above 110 a barrel, dollars that is. But if you take a look at WTI, that's already paring back to 104. In the past 3 days, that is down by 7 3/10%. What's the latest there? Basically two things. One is geopolitical developments. Ukraine saying that there has been talks with Russian negotiators. That's going to be starting today. Hopefully looking at an improvement in the immediate humanitarian situation. That's what they said will be the minimum thing that they're going to be asking for. Another thing is China. There's quite some mobility curbs going there, and that might be hindering demand for oil, and that's been bringing down the prices. So we'll see whether those price hikes go back down na naman to a rollback in the coming week. But as you mentioned, how are markets doing? Not that great, at least domestically, back below the 7,100 levels we've been seeing, but nevertheless still trading sideways, down by 0.7% this Tuesday morning. But the good news is the foreign exodus seems to have taken a halt, at least in the past, after 7 days. Now you can see a bit of green coming back in. This as the 5-day moving average of the net foreign outflows has slowed to $8.5 million compared with what we saw in the past 20 days, which was more than $10.2 million we were losing every day from our foreigners. And just a quick update on the index here. You can see on my right side, the movers, they did launch an index. This is the PSE that has now showcased, and we said that in our headlines, mid-sized companies and another that is giving high-yielding dividends. So the yield index, that's going to be 20 companies which are giving quite high dividends to our investors, and the mid-cap index is also the 20 companies based on the free float and market cap of these index. And why is that? Well, some analysts are saying that not everyone wants to invest in the large cap. Some would like to see the mid-caps, the dividend plays, alternative investments, and this would increase the liquidity. I wanted to check as well on PAL Holdings, Jess, that came back to the bourse in trading finally after quite a long time of being stuck there. And take a look at that, paring back by 1 4/10%. But this, of course, comes after a 15%, almost 15% jump yesterday as it started trading. That was the most since 2020, since it was, of course, suspended in June. And finally, just a quick peek on the property space. We did have David Lichu of LPC earlier in the show saying that the live requirements are improving in the first quarter of 2022. You can see the property index, however, down by 0.3% today. But one clear standout, and that is Vista Land, up by 3.5% this morning. This as they've now said that they plan to start that 9.2 billion peso REIT IPO already next month. So they're going to start book building already just April 11 to 19, and they plan to list it on May 6. So yet another one to be gracing our REIT indices here, following, of course, Citicorp, which had done an IPO earlier this year, Jess.
Here are other headlines we're keeping our eyes on. There's a new milestone in the Philippine startup ecosystem, Grocery, which provides e-commerce services to sari-sari stores, carinderias, and other MSMEs, has raised some $77.5 million, or about 4 billion pesos, in its latest funding round. The latest activity was led by the International Finance Corporation of the World Bank Group, which says a total funding for Grocery has now reached $110 million, or about 5.7 billion pesos. Grocery says its total is the largest ever raised in the Philippines and Southeast Asia in the business-to-business and MSME space. Grocery hopes to use the funds for further expansion. To date, it serves more than 10,000 sari-sari stores in 220 municipalities across Luzon.
The MRT3's month-long free rides program is designed to restore public confidence in the train line that's after its rehabilitation. This is according to the Transport Department, which said the government wants to show off certain improvements to the train line. The agency said the MRT3 can now deploy 18 to 22 trains during peak hours. That is a far cry from the previous 10 to 15 trains that could be deployed prior to the train line's overhaul. Additionally, the department said the free rides program aims to ease the financial burden on passengers amid the rising inflation and fuel prices.
All right, we'll take whatever we can these days. Free rides, that's a reprieve from the rising cost of fuel here in the country. And that's a first look into the business day this Tuesday, March 29, 2022. Join us again tomorrow at 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com. And stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.